When markets tremble and uncertainty looms, what does Warren Buffett do with his cash? You might think he dives in head first, but actually, his approach is far more calculated. And that's what sets him apart. In this video, we're unlocking the real secrets behind Warren Buffett's cash strategy. What he thinks, what he does, and what you can learn from it. Whether you're just starting out or managing a growing portfolio, this video might just change how you look at cash. Let's dive in. Discover the wisdom behind his cash allocation, investing philosophy, and how you can apply it today. Warren Buffett once said, "Cash is to a business as oxygen is to an individual." You never think about it when you have it, but it's the only thing occupying your mind when it is absent. Cash isn't flashy, but it's essential. It keeps your investment engine running, especially when times get tough. Buffett doesn't believe in holding cash for the sake of holding it. In fact, he often criticizes those who let inflation eat away at idle cash. But he also doesn't believe in being fully invested all the time either. Why? Because cash gives you optionality. It gives you the power to act when others are panicking. Let's take a look at Berkshire Hathaway. Buffett's company is currently sitting on over $325 billion in cash. That's not an accident. That's a calculated strategy. Why hold that much? Because Buffett wants to be ready, to pounce on opportunities when they come. When markets drop, businesses become available at discount prices, but only those with cash on hand can take advantage. Here's a Buffett gem. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. The key lesson here is that when the market hands you gifts, you better have the cash and courage to grab them. So, Buffett treats cash as a strategic reserve, not a permanent investment. It's the dry powder he needs when the market goes haywire. So, how much cash should you hold? Buffett has often said that Berkshire will always hold at least $30 billion in cash, no matter what. That's his safety net, his sleep well at night number. Now, your number might not be in billions, but the principle is the same. Hold enough cash to weather the storm, but not so much that it holds back your growth. Think of it like this. Emergency fund? Yes. Opportunity fund? Definitely. Excessive hoarding? Nope. Not if you want long-term growth. Now you might ask, is Buffett trying to time the market with all that cash? Not really. Buffett is not sitting around waiting for a crash. He's waiting for value. He's patient. But when value shows up, he's lightning fast. He's said many times, we don't have to be smarter than the rest. We have to be more disciplined than the rest. That's the heart of his strategy. So while others are chasing trends, Buffett is building up his cash and waiting for moments when the market forgets what companies are worth. That's when he strikes. Let's rewind to 2020. The pandemic hit. Markets crashed. Panic was in the air. But Buffett waited. Not just waited. He even sold his stake, but in the right industry. One major move that Berkshire made during 2020 was selling down airline stakes. In fact, many criticized him for not buying aggressively during the dip. But in hindsight, he wasn't convinced that prices reflected value yet. He prefers certainty over speculation. Eventually, when he did move, it was strategic, like investing in Japanese trading companies or Apple stock earlier. His moves were never emotional, always calculated, always long-term. That's the real power of cash. It lets you think, not just react. Let's talk inflation. Buffett is no fan of holding cash forever, especially in high inflation times. He knows cash loses value over time. That's why he prefers buying productive assets, like quality businesses, that grow in value and generate cash flows. But here's the nuance. He still keeps enough cash for resilience. So, the strategy isn't all in or all out. It's a balance. Enough cash to survive and strike. Enough investment to beat inflation and grow. That's Buffett's style. So, what should you do with all this wisdom? Here are 5 actionable lessons from Buffett's cash strategy. 1. Keep a cash cushion. Build an emergency fund that covers at least 6 months of expenses. You'll sleep better. 2. Be patient. Don't rush to invest every penny. Wait for opportunities that truly offer value. 3. Avoid emotional investing. When others are greedy, be cautious. When they're fearful and value appears, that's your time. 4. Don't hoard cash forever. Inflation is real. Long-term, invest in businesses, stocks, or assets that beat inflation. 5. Use cash as power, not fear. Buffett doesn't hold cash because he's scared. He holds it because he's strategic. Let me rerun the 5 key lessons from Buffett's cash strategy for you to remember. So, what does Warren Buffett really think about cash? It's not about fear. It's about freedom. Cash gives you options. Options give you control. And control builds wealth. Next time you think of cash as boring, remember, to the Oracle of Omaha, the bid daddy of investing, it's the quiet weapon of his investing strategy. If you found this helpful, drop a like and subscribe for more deep dives into the minds of the world's greatest investors. What's your personal cash strategy? Tell us in the comments. And don't forget to hit the bell so you never miss a moment of money wisdom. Until next time, invest smart, stay calm, and keep learning.